Today is Tuesday, April 29th, and this is another update on my progress of beating the S&P 500 along with Bill Ackman's Pershing Square holdings. I do make these videos every Tuesday and Sunday, so if you want to follow along, hit that subscribe button, and let's get into it. We'll start off with the events this week. Today we saw the job openings come in at 7.2 million when the street was looking for 7.5. I did decide to put it in red because it was negative. On the bright side, the layoffs have slowed down, so that is one positive. The consumer confidence did come in lower than expected at 86 when the street was looking for 87.3, which does mark 5 consecutive months of declines. So that's going to set the stage for the first month where the actual number is higher than the estimate. And when that does happen, the market should definitely see some positive reaction. And then for the rest of the week, starting tomorrow, we're going to have the GDP, the ADP employment, the personal consumption and expenditures index, along with pending home sales. And then Thursday is going to bring us initial jobless claims, existing home sales. And then we're going to wrap it up Friday with the employment report along with the unemployment rate. So we're definitely not off to a good start technically for the week. But I do think that by the end of the week, we're going to have a lot more positive news than we did negative. And if we move over to the SPY chart, you'll see that it's continuing its bullish momentum. On Monday, it was just barely, but the markets did go up, and then they continue to go up today as well, which also means that the SPY price still sits above the 5-day, and both of those sit above the 15. So since the market has gone up over the last 2 days, obviously we haven't had an opportunity to have a dip and then a bounce back, creating a second higher low. But from where the SPY price is right now, it would have to drop over 8.14% in order to drop below the old previous higher low. So even though we haven't even technically come close to making that second higher low, the farther that the SPY price gets from the old previous higher low, we have less of a probability to actually cross back below it. If we take a look at the RSI chart on the bottom, which is the relative strength index, you'll see that on the bottom at 30, that's when the market's considered oversold. And when it's trading towards the top at 70, that indicates an overbought condition. So right now we're just above 50, which is actually perfect because that indicates that we're not overbought or oversold, because it's almost impossible to gain bullish momentum when everyone's panic selling, like we see in these two examples. And now if you take a look at the MACD chart down on the bottom, you'll see that the MACD first crossed the signal line on April 14th. It then almost crossed below it on April 21st. Luckily, it was able to bounce off of it, and it's continued to increase its distance from the signal line, which is always looked at as a bullish signal. And last up, we're going to take a look at the VIX chart. This area right here is what I consider its normal trading range. The VIX did climb slightly on Monday before falling again today, so we still haven't crossed below the top of the normal trading range, but we are getting closer. I say that if we keep on the current pace, it should be another week and a half to 2 weeks before we actually cross below the top of the normal trading range. But of course, that doesn't take into account the bad news that we might get in between now and then. I felt pretty good about the market conditions overall for my last update, but I feel even better about them now. These are going to be all 14 of my current positions. Right now, my top 5 is comprised of Microsoft, Welltower, Meta, Costco, and Nvidia, and those make up 43.45% of my portfolio. I decided not to make any changes to my portfolio since my last update, so right now I'm at 92.69% invested, which means I have 7.31 sitting in cash. Since I do think that the markets are about to get back on track, I would like to get that 7.31% down to 5. I know one of the positions I wouldn't mind increasing is Mind Medicine, which right now makes up 3.64% of my portfolio, and that's sitting at an 11.72% loss right now, so I look at that as a possible good dollar cost average opportunity. Another one I would be interested in increasing is my Disney position. Right now that makes up 5.38% of my portfolio, and it's sitting at a loss of 7.31. It was at a 25% loss in my portfolio when I decided to increase my position by 100%, and it's gone up more since then, which puts it at the 7.31% loss that it's at right now. But when I entered into it originally, I was really confident about the position, and at least to me, nothing has really fundamentally changed about their business since I originally opened the position. So the way that I look at it right now is it's actually trading at a discount. My high flyer is definitely going to be Palantir, which has a 33.87% gain and makes up 5.94% of my portfolio. Even though that position is showing a lot of strength, that's one of them that's extremely volatile, and that 33.87% gain could very quickly turn into just a 20% gain, especially if Wall Street starts to get nervous about it again. So I'm leaning on just keeping that exactly the same and just letting it do whatever it's going to do, because its 5.94% weighting is still a pretty good size. PayPal with a 19.66% loss and Nvidia with an 18.54% loss are definitely my biggest drags on my portfolio, but I trimmed my Nvidia position about a week ago, so I don't really have any interest in increasing that again. And I do really like PayPal and think it's a great company, but right now 7.48% weighting is as much as I want to have in that, unless it can show some sort of sign of a bullish reversal. But right now it's been at between a negative 15% and negative 25% loss in my portfolio for quite a bit. So for right now, I'm just going to leave that one the same. Since Monday, Pershing Square had a gain of 2.87%. My portfolio saw a gain of 0.63, and the S&P 500 had a gain of 0.65, which brings us year to date. Pershing Square is at a loss of 0.68. My portfolio is at a loss of 1.65, and the S&P 500 sits at a loss of 5.24. That's going to do it for today. I do make these videos every Tuesday and Sunday, so if you want to follow along, hit that subscribe button, and I'll catch you on Sunday.